Yo, what's going on, everyone? Hold up. Let me see if this is loading real quick. Hold on. Okay, bet. All right, we back. All right, yo, what's good, everyone? What's up? What's up? All right, I know it's been a minute. I know it's been a pretty fat minute. I haven't done the last class. The last time I did a class was like a month ago, maybe. I don't know. But anyways, what's up, guys? What's going on? What's going on? What's up? Here, let me go ahead and put this out here because I'm live on YouTube. Let me go ahead and put this out for my other people here, for my other peeps. But what's going on, guys? What's up? Okay, so here, before I start, let me go ahead and put this out real quick. There we go. Okay, so welcome everyone. Welcome. I'm seeing a lot of heads here that I've seen before. So, what's up, guys? But alright. So, where do I even start? Okay, so for those that don't know, yeah, for those that don't know, we've been on a 1 month winning streak for literally 30. It was like what, like 40 days. We had a green day every single day with zero losses. And unfortunately, on last Thursday and last Friday, I took some L's. They were, I'm not gonna say they were small, but they weren't big. Hey, what's up, guys on YouTube? What's up? But yeah, they weren't the craziest losses. I mean, we respected our rules and all that stuff. But you know, the market did get us. I know these last 3 weeks the market has been pretty choppy, or these last 2 weeks the market has been really choppy. So it it caught up to us. You know what I mean? We were doing good, and it got to the point where we were doing too good, and we messed up a little bit. You know what I mean? But we're back. I'm sure you guys saw. What's up, everyone? What's up? I'm sure you guys saw today. We ended up going green. We ended up catching the sell off right here. But anyways, that's besides the point, right? So pretty much the whole point of these classes, I'm gonna do them every single day this week, cause I kind of like, okay, I want to split them up, right? So we went green for about 40 days. Yes, I am streaming on YouTube. Yeah, I am. So let me see. Do you still have the 3-day free trial? No, use code trial for the monthly, and it'll give you a nice discount. Nicolas. Okay, so guys, so I'm gonna try to split these classes up for 5 classes, meaning today, tomorrow, Wednesday, Thursday, Friday, and all that stuff. Because with us being green for 40 days, of course, there's a lot of trades that I want to teach you guys and show you guys on how I did them, how I found them, how you guys can find them, exactly how you guys can catch them to make money off of them. Right? It's exactly how I did it. Right? But before that, I know there's a lot of you guys that might be new to the server or might be new to the stream. And you guys might not know or might not understand or might not even get the whole idea behind my strategy. So what we're gonna do today is I'm gonna explain to you guys one of my models. I have 2 models. I trade inverse fair value gaps and I trade regular fair value gaps. Right? On top of that, I'm gonna let you guys choose, maybe for the people in the premium or for the people on my YouTube. Yeah, sure. Here's the link. Um so for the people on YouTube, I'm gonna let you guys choose which trade exactly you would want me to review today, tomorrow, the next day, and so on. Right? So today I'm gonna kind of break the ice and show you guys my entire strategy. I'm gonna show you guys one model, the important one, which is gonna be the inverse one. This is the one that I trade practically every day. Some days it will be a little bit different, but in most cases it's gonna be the inverse value gap model, right? So let's get straight into it, right? And after we finish this, I'm gonna let you guys choose. Like I said, will this be on YouTube? Yeah, it's being recorded right now. Yeah, it is. I just sent the link above, right? So pretty much let's just get started, right? And then after, I'll let you guys choose one trade, 1 or 2 trades. It depends how long this takes. I'll let you guys choose 1 to 2 trades depending on how long it takes, and I'll show you guys exactly how I found them using the strategy and how you guys can apply it to your everyday trading, pretty much. All right. So right here, what is the first thing we do every single day? Okay, before I do this, because I know I've done a few classes back then. For those that remember my strategy, what are the 4 things I pretty much look for? Let me see if you guys remember this. It could be on YouTube, it could be on Discord. Let me see if you guys remember that, because I am seeing a bit of heads that were on here. You know what I mean? Let me see. I see several people's times. I'm gonna give you. There it is. Drawn liquidity MSS. Okay, wait. There's one more thing missing, Carson. There's one more thing missing. Trend. There it is. Exactly, the trend. All right. So the first thing we always need to do is, okay, for the new people in here. You guys might not understand this. Wait, let me see something. Let me make sure it's good. Okay, yeah, it's good. Okay, so what we have to do here, right, is there's 4 things I look for in my strategy. The first thing is always going to be the trend. The trend is the most important thing. If the market is chopping, just like Thursday and Friday, right, when the market was chopping, I try to get a trade. What's going to end up happening is, even if the setup looks good, if there's no direction in the market, it's not really going to go your way, right? It's going to be a little bit hard to go your way. So you guys need to make sure that when you guys are trading in the market, it's either in a bullish or bearish trend. If the market is chopping and it looks like a barcode, do not trade it. That's simple, all right? So we're not going to do that. So the first thing you guys always need to look for is, number one, the trend. You need to make sure that there's a trend. And I'll show you guys exactly how to look for trends, tips on how to find the trend to see if it's actually confirmed, and so on. Number two, just like how Carson said, draw on liquidity. That is the key thing of my strategy. It'll tell you exactly where the market is going. It'll tell you when the market will reverse, and it'll show you exactly how to find price targets, right? So draw on liquidity is, in my opinion, by far the most important thing in this strategy. You guys need to understand this, and lucky for you guys, well, at least you guys tell me that it's pretty easy to understand, right? At least from my teachings, right? So I'll show you guys exactly how to do that as well, right? So number two is going to be DOL. Very, very, very important. Number three, right? This is for this model only, which is the reversal model. I'll show you guys how to time the reversals, how it catches the bottom or the tops of the markets, because I got a lot of you guys DMing me saying, oh, how did you know it was going to reverse even though the market is dumping 300 points, right? For example, right? So number three is going to be the market structure shift, right? This is going to be also, I mean, everything here is important, right? So you guys, I'm going to show you guys how to find this as well. It's really, really easy. And of course, number four is going to be your entry model, which is going to be the cherry on top to the strategy, which is going to be pretty much fair value gaps or inverse fair value gaps, right? Just like that. Now I'm gonna put like a little thing in number 2 and 3, so you guys can kind of know what it stands for, which is gonna be draw on liquidity, and number 3 will be market structure shift. So for those wondering what MSS stands for, it's market structure shift, right? It's pretty much when the market, you know, like the trend of the market just flips. Could be bullish to bearish or bearish to bullish, you know, stuff like that, right? It's just the structure shifting, right? So market structure, right? Yeah, shift. Okay, there we go. These four things right here is literally what gives me these payouts. I don't know if you guys saw this, but we recently got a payout and all that stuff. A lot of members have been getting payouts thanks to this strategy right here. It's an amazing one. Of course, it doesn't have a 100% win rate, but it's definitely out there. You know what I mean? But yeah. By the way, if you guys got a payout in this chat or in the YouTube chat, guys, let me know, because I put it out in an announcement not too long ago about the payouts. All right, the fact that we have the same strategy is crazy. I'm taking notes right now because I need help with the daily bias. I actually don't trade with the daily bias. I trade with the bias that we get, you know, throughout the morning, you know, like real time. I don't really look at the daily time frame, but I'll show you that right now. All right. Are you currently live on Discord? No, for my server, guys, you guys are live on YouTube. I'm live on another Discord, helping this class out as well. So it's pretty much a 2-in-1, guys. David, wait, how can I get a sexy profile picture like yours, David? I don't know, bro. Will you post the live stream? I have to go. Yeah, here it is. Okay, so first things first. How do you identify a trend? Now, a lot of you guys might be saying, "Oh, why do you need to review this?" Well, it's because there might be new people in here, and I want everyone to get, you know, the same value pretty much, right? So it's actually really easy. This is going to consist of two things: higher highs and lows, and lower highs and lows, right? Lower highs, lower lows, and all that stuff. It's super simple to find the trend. So step one to the strategy is gonna be a pretty simple thing to kind of understand, but I'm gonna do it just so you guys can understand everything to the T, because maybe you guys might have some questions or might just be a little bit confused here, right? So what we're gonna do here is we're gonna go ahead. Let me see. Okay, so what exactly is a trend? Of course, the trend is when the market is going steadily. It's not going only up. There could be red candles in a bullish trend. It's just when the market is steadily going up. And this is where the higher highs and higher lows comes into play, right? So in a bullish trend, like this, for example, when the market is constantly going up, right, it's going to have these mini pullbacks, which is normal, right? But this is how a bullish trend looks like. Sure, sometimes it might look a little bit uglier. Sometimes it might look a little bit prettier. But the overall idea of the trend is when the market looks like this, where it's steadily going to a certain direction over a certain period of time. You know what I mean? So this is what a bullish trend looks like, right? But how do you know exactly it's a bullish trend? Well, first and foremost, if you guys have eyes, you guys will know that the market is currently, you know, it's obviously going up. But there's actually a way to confirm what the trend is, and that's known as higher highs and higher lows, right? So we're gonna write here is higher highs and higher lows. Now, what exactly is a higher high? Well, it's really easy. So when the market is going up, it's constantly creating these highs, right? Because of course it's going up, right? So what's gonna end up happening is you're gonna have the main low and you're gonna have the main high. This is where the market starts trending, right? So what we're gonna do is we're gonna go ahead and label this as, of course, the main high, and we're gonna label this the main low, right? Just like that. Now, as the market is going up, the next breakout is gonna be even higher, right? So we have the high up here, we have a higher high. You guys get what I'm saying, right? So what you're gonna do here is, of course, you're gonna mark out the next high, after the pullback, and you're gonna label this as the higher high, right? And it just goes on and on and on, right? As the market keeps going up, it's gonna keep creating higher highs from the previous high, right? It's just breaking out constantly, going up, right? Now, let me see, right? Input this right here. Okay, and same thing goes with the lower low. We have the main low right here. We go up, we go down again, which creates a new higher low. We have a low, it's just higher than the previous one, which signifies the name higher low, right? So we're gonna go ahead and right here is gonna be this right here, and we're gonna write it as higher low. Now I don't feel like I should create an example for a downtrend. It's literally the same thing. You're just gonna label it differently. Instead of creating higher highs and higher lows, you're gonna be creating lower highs and lower lows. It's that simple because it's going down. You know what I mean? So I'm not gonna waste too much time explaining that part because it's the same thing. Now we're gonna go ahead and label it like this. Now you might be asking, why is me labeling this so important? Well, first of all, you need to make sure that you know what the trend is, and it's pretty obvious, right? So the trend is going up. But the reason I tell you guys why this is so important is to go to step 2. So now that we know exactly what a trend is, it's pretty much when the market is going up or down, we need to make sure, once again, guys, if you guys are writing your notes down or whatever, make sure that you know what the trend is before you guys take a trade in the market. If you guys do not know what the trend is, or if the trend looks like this, for example, right, like these last 2 weeks where the market has been horrible, right, the trend has been like this every single day, right? You don't know what's happening here because the trend is just chopping up. It looks like a barcode, right? So when the trend looks like this, guys, just close the computer. You know what I mean? Like, you not trading for a day, 2 days, a week, maybe even a month, you'll be fine, right? As long as you don't lose money or give profits to this type of market, you'll be fine, right? Which is why many of the days last week, yeah, exactly, yeah, exactly. So that's why many of the days last week I was cash. It's just because the market wasn't giving out any opportunities, anything to really look for, and it was just impossible to trade, in my opinion. Yeah, it kind of ended up getting to us on Thursday and Friday because I'm like, you know what, I gotta put something out. But yeah, anyways, so in your notes, guys, make sure that the market looks like this, like it's steadily going up or down, or if it looks like this, just don't trade it. So if you guys want to take a picture of this, go ahead. Right? Thursday and Friday was crazy. Yeah, it was crazy bad. That's what it was. Crazy bad. I tried and will tell you it will backfire. Yeah, it will backfire. Trust me. Trust me. The market will catch up to you when you think you got it. Anyways, so let me make sure that my camera's focused here. 1 second. Yeah, it is. Okay, cool. Perfect. Okay, so now that we know exactly what a trend is in the market, like I said, can it be bullish or bearish? Same thing, right? Now we're gonna go to step 2 of the strategy, out of the 4-part strategy. Draw liquidity. Now, this is how it's gonna look like. So as the market is going up, of course, I'm gonna explain to you guys on in the best way I could possibly. Let me see. Hey, David, I was wondering if you like to use support and resistance, or maybe you like to use, in my opinion, support and resistance is like the best thing out there. It's the reason why we're able to understand the market. But I'll show you more in a second. Literally, support and resistance is what makes the market, in my opinion. What time frames are you looking for the trend? Honestly, the higher the time, the time frame doesn't really matter, as long as you're able to identify the trend. Now, I'm gonna tell you this: the higher the time frame, the better. Why do I say that? Because, of course, on the lower time frame, like the 1 minute or the 5 minute, there's way too many candles, and when there's way too many candles, of course, you're gonna be all over the place, right? So when you filter out these useless candles, well, not useless, but you know what I mean, like these messy candles, and you go to, like, for example, the 30 minute or the 1 hour, it's a lot easier to identify what the trend is on the higher time frame. So in my eyes, like I said, you could use any time frame to pretty much see what's going on. But the higher the time frame, the better. That's my opinion. That's what I've always gone with. David, what are your thoughts on bottomless candles? I've never heard of that. But anyways, okay. So step 2, drawn liquidity. How exactly do we find drawn liquidity? Well, I'm gonna explain to you guys just like, as simple as I can. So for those that don't know, I trade a concept known as the bank concept, or whatever it's called. I don't know what it's called, but it's something with the banks, right? Oh, without wicks, those are what the fair value gaps are made from, like the bottomless candles or like the topless candles. Those are where fair value gaps are made, because those are imbalance candles. And that's what I trade to get my entries. Will this be recorded? Yeah, it will. All right, guys, I'm gonna stop reading the chat so much because I need to get to a point, right? I'm not trying to be here all day. Anyways, okay. So the trend, right? We got the trend. Now step 2, drawn liquidity. right here, what can we do with drawn liquidity? Well, like I said, I'm going to explain to you guys the bank concept that I use personally to understand what the market is doing and why exactly it's going to do it, right? Now, for those that don't know, all right, so think of it like this. Clearly, when the market is going up, many people out there, it could be you, it could be me, it could be a new trader, it could be an experienced trader. As the market is going up, of course, people are going to be looking to play with the market going up. Same thing with the market going down. Of course, if the market is going down, you want to be playing with the trend. You guys know this is a saying that goes around the trading community where it's like the trend is your friend, right? Because it is, right? Of course, you're not going to be going for longs when the market is going down. That's pretty stupid. You know what I mean? So as the market is going up, a lot of traders out there, they use pullbacks as an opportunity to go ahead and find an entry point. For example, right here, the market is constantly going up, right? Let's say, for example, it went down here, and we start seeing a lot of buyers stepping in. A lot of people, they're going to see this as a nice buying opportunity because what the pattern is right here in the market is the market goes up, it pulls back a little bit, goes higher, pulls back, goes higher, right? So what the average trader would think would be like, okay, well, the market is going up, it's pulling back, I think it's going to go back up, right? So what I'm going to do is I'm going to go ahead and place a buy order. Let's say right here, for example, right, like right here, we're going to go ahead and place a buy order just like this. Now, what tends to happen is many traders that enter off this pullback or off the bounce or whatever, they're gonna go ahead and tend to place their stop loss. For the people that trade with the stop loss, which I'm sure is everyone, I hope so, is they're gonna go ahead and place their stop loss at where the market bounced from, right? You guys might know I do the same exact thing, right? So it would just make the most sense. So when you guys place an order, right, of course you're gonna look to, you know, maybe 150 points, whatever, right? You're going to go ahead and place your stop loss where buyers stepped at the absolute bottom where buyers stepped in. Why is that? Because, you know, as the market is going down, it's going to be a little bit hard for sellers to break below this level because this is where buyers kind of found their strength and stopped the sellers from going any lower, right? So think of this as like more of a buying territory. Now, what tends to happen? Well, what tends to happen here is when a lot of people see this bounce and a lot of people enter off this bounce, what's going to end up happening is a lot of people tend to place their stop loss at this low right here. Now, what ends up happening? Well, when a lot of stop losses are placed at a certain level, banks are able to see the stop loss, but not in the way that you guys might think. It might not be like, oh, let's say for example, whose name can I say? Who's Javi, right? The one in the chat that said, will this be recorded? Let's say that he placed a stop loss right here, and he entered longs, right? The bank is not gonna be like, oh, Javi entered longs, I'm gonna go ahead and stop him out. No, that's not how it works, right? The bank is not out for you. They really don't care about you, right? What they care about is when there's kind of, what do I trade? I do futures. There's kind of like, think of it as like a pool of stop losses, pretty much, right? So what tends to happen is when, let's say for example, a million people ended up entering off this bounce up right here, and they place your stop loss at the absolute bottom at 561, which is this line right here, right? What tends to happen is when everyone places their stop loss right there, it creates a whole bunch of open orders which have yet to be filled. Meaning that if the market goes down into that level, right, everyone that has their stop loss placed at that level, they're gonna go ahead and get stopped out, right? What tends to happen is, you guys know, the market, there has to be a buyer and there has to be a seller for the market to move, right? So what's gonna end up happening is when, let's say for example, you guys entered off this bounce up, right, and you're looking to sell your contracts here. When the market goes down into this level, if it goes down into this level, someone is gonna buy it from you, right? So what tends to happen? Let me see. I enter your trade with 3 minis instead of micros. Oh yeah, no, bro, you're done for, bro. You're done for, bro. Anyways, so what's gonna end up happening is a whole, like, think of it as like a pool of liquidity, which is what it's known as, or a pool of stop losses. It's the same thing, right? Liquidity, volume, stop losses, same thing, right? What's gonna end up happening is, like I said, where there's a seller, there's a buyer. So when you're getting stopped out, someone is buying your order. It's how the market moves, you know, stuff like that, right? So what tends to happen here? Well, this is where the bank concept comes into play, right? You guys know banks, they have the money and they have the, or not banks, it could be institutions. The algorithm is kind of known as the algorithm, not banks. It's not like someone in a computer at a Wells Fargo just placing orders. You know, it's not like that. It's an algorithm. It's a computer that thinks, right? So it's not like someone has power over you and can see exactly where you have your stop loss. No, it's a set of numbers that the algorithm can see where exactly there's a huge pool of orders, you know, so the market can buy it from, or like the banks can buy it from in the market and stuff like that, right? So when a lot of you guys are placing a stop loss at a certain level, what that creates is liquidity, right? And you guys know the banks, as the market is going higher and higher and higher, they don't want to be buying as the market is going up. They want to be buying at the absolute bottom that they possibly can. right? And how do they know exactly where the bottom is? Well, it's really easy by reading the numbers and where your stop loss is pretty much placed at, right? And pretty much everyone's stop loss, for example, what tends to happen is with all the money that the bank has, which is billions and maybe even trillions, right? What tends to happen is they manipulate the market to go right back down into everyone's stop loss, right? We all get stopped out, and like I said, where there's a seller, there's a buyer. So what tends to happen is when we're selling it at the absolute bottom, which the algorithm knows because it could read all the orders nearby, right? And the numbers say that all the orders are here. So what tends to happen is the algorithm pushes the market down. It's known as manipulation, but it's not really guaranteed. I mean, no one knows behind this. It's more of a concept, right? That's the concept that I trade off of, right? So what's gonna end up happening is they stop you out, right? And you're like, if I ask you guys this right here, like how many times have you guys been stopped out at the absolute bottom before it it goes out to your price target? Let's see, are my orders being sent on the funded account? No, funded account that's a simulation. It's a fake account. It's a prop account. So no, if your guys are on a funded account, it doesn't mean anything. But this is the concept behind it, right? Because remember, not everyone trades on a funded account. Anyways, so what tends to happen is before the market goes any higher, the algorithm or the banks, they're going to make sure, they're going to do everything in their power to stop everyone out. Let's say, for example, it's the 91 of us and the 68 of you guys on YouTube, right? We're on the same order, we're on the same trade, everything, right? They're going to be like, oh, this is free liquidity because we know that everyone has their stop loss at this level, right? So before we pump the market back up, what we're going to do is we're going to push it down, stop everyone out. Once everyone gets stopped out, we're going to buy their orders, and then we're going to make the market go right back up. This right here is known as a liquidity sweep. I'm sure you guys have heard of it. It's a pretty popular term in the market. Yes, I trade with my funded. Yes, I do. It's a pretty popular term in the market, but this is what it's known as, a liquidity sweep. So pretty much what's going to end up happening is before the market goes up, let's say, for example, you have your stop loss right here. What could happen is the market goes down. Right as you get in, the market goes down. It stops you out at the complete bottom, and it goes even higher. This right here is known as a DOL sweep, or it could be a liquidity sweep. Same thing. Right, what fund do I have? I have Apex, and I have the 50k accounts. Now, if you guys want to buy Apex with an 80% off, I'll give you guys a code here that I have that you guys can use. Right here, let me go ahead and put this right here. 80% off. There you go. There it is. So those are the funded accounts that I use. I use a Tradevate 50k account. Right. Anyways, okay. So let me ask you guys this in the chat. Right, YouTube and wait, let me check this real quick. YouTube and Discord. So far so good, right? Right, guys? You guys understand the trend, and do you guys understand the concept for the banks, right? The drawn liquidity concept. Do you guys understand that part? And let me finish this example. Same thing goes as the market is going up. We have liquidity here, here, and here, right? Yes, perfect. YouTube, let me know if you guys are good. I'll wait for you guys in the chat if you guys want to say anything. But I'm assuming you guys are good, right? So, guys, same way how liquidity is formed right here, we have the same amount of liquidity here, here, and here, right? So just let's say for example, okay. So step 2 is not done yet. Let me see. When you say trend, do you mean higher time frame trend? No, it could be, like I said, any time frame. It could be the 5-minute, the 10-minute, the 15, 20, 30, 1 hour, 4 hour, daily time frame. It doesn't matter. Right, the strategy works on any time frame. For me personally, I like to use the 5-minute. I know you guys are gonna ask me, oh, what time frame do you use to trade? It's the 5-minute time frame. Right. So how many micros would you do on a 50k account? 9. Do 9 micros. Is it important to mark out all the highs? Yes, very important. Roids. The whole point behind that is so you can know where liquidity is lying, which is what I'm gonna show you right now. Alright, Roids. So we're not done with step 2 yet, right? To continue step 2, now you guys have to understand the magnet concept, which is the same thing, right? Think of these levels right here, these higher low levels, as magnets, right? So we have, let me kind of put a magnet emoji right here so you guys can understand it, right? So we have one magnet here, right, which is DOL. We have the second one. Let me see if I can grab the emoji right here. We have the third one right here, and think of, we have the fourth one, of course, at the main low. Now the main, guys, before you guys ask me, like, oh, which level should I be looking out for? Okay, write this down because it's going to be very important. The most important low or high that you guys should be looking for will be the main high or the main low, right? 5 minutes for trades. Yeah, exactly. Thank you, Gabriel. Thank you. Right? So the main low will be your strongest point of liquidity because this is the lowest point the market went to before it went up, right? Or it could be the highest point the market went to before it went down. It's stuff like that, right? that is going to be the most important level, or the strongest level, if you guys are going to be asking for drawn liquidity and all that stuff, right? So I'm going to write it down right here, right? Most important level of DOL will be the main, low, or high, right? Just like that. So it's going to be like a tip, right? Like a pivot point. I don't know too much about pivot points, but I guess you can consider it like that. Yeah, pretty much, right? Okay, so think of it like this. Let's say that we get a reversal in the market, we sweep liquidity, which I'll cover right now, exactly how to read it and all that stuff, and the market starts going back down, right? Which is, it's fine. So what's going to end up happening here is the market starts going down. We take out one magnet, right? The market is going down because, like I said, banks, they want to get filled at the absolute bottom before the market goes up. So what's gonna tend to happen is, before the market goes any higher, the banks want to get filled at the absolute bottom. So they're gonna make the market go down, take out every level of liquidity nearby, stop you, me, and everyone in here out, right? They're gonna get filled because, once again, where there's a seller, there's a buyer, right? And now, as the market keeps going lower, everyone's getting stopped out, banks are getting filled, and once every low gets taken out, like this, the main low, the higher low, higher low, higher low, stuff like that, what's going to end up happening is the market is going to do something known as an MSS, which I'll cover right now. Matter of fact, I'll cover it right now. Pretty much what a market structure shift is, like I said, guys, it's when the trend is flipping from bearish to bullish, right? And this is where the strategy is going to click for many of you guys. Trust me, it's going to be super easy. Watch this, watch this. So we can see here that obviously the trend is pretty bearish in the market. Why is the market bearish? Because, of course, the market is going down and it's creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? We can see the market is constantly breaking new lows every single pullback, right? So obviously the trend is bearish. Okay, perfect. Now, what tends to happen when banks take out every liquidity from the previous trend, which is the bullish trend? What's going to end up happening is they're slowly getting filled, stopping everyone out, one by one, right? Once the banks have no more liquidity to the downside, or no more huge orders that they want to go ahead and take out, I'll show a real graph. Don't worry, I'll show it. What's gonna end up happening is when the banks just have no more space to go any lower, they're gonna go ahead and form something known as an MSS. Once again, a market structure shift. That's what it is. It's pretty much, it's the trend going from bullish to bearish, or from bearish to bullish. That's simple, right? And here is where the strategy plays along, right? So with the okay, let's say for example, we created a fair value gap right here. Let me ask you guys this. Matter of fact, on my YouTube and on Discord, how many of you guys in here understand what a fair value gap is? I'm hoping it's a lot of you guys, because I'm really not trying to explain it. How many of you guys explain? No, Justin, you know what it is, bro. You know what it is. Come on now. 40 points, kinda imbalance, no clue, bro. Okay, matter of fact, let me do something that's easier, because I'm really not trying to explain it, because it's a whole different topic, right? So what I'm going to do is I'm going to link you guys one of my videos where I explain it in about 30 minutes. Here it is. Alright, so guys, for those that don't know what it is, or have no clue, or have an idea of it, or whatever, guys, save this video for later. I know the chart might not make sense for now, but it's fine. Trust me, watch this video after this class is done, and come back to this time frame, or timestamp, or whatever, and just rewatch the whole thing. Trust me, it's gonna make the most sense, right? Anyways, so let's say for example, for those that don't know what a fair value, for those that know what a fair value gap is, let's keep this going, right? So let's say for example, the market is obviously in a downtrend, creating. I'm gonna go ahead and delete this, because you guys know that we already took out liquidity to the downside, and the market has no more room to go lower, which is where the MS is gonna form, right? So I'm gonna go ahead and delete these levels, because they're not really all that important anymore. Yes, I'll be answering questions. Yeah, don't worry about it. Yeah. Right, so boom, the market just took out every low nearby, and of course, as the market was going down, it's creating more liquidity to the upside. It's a never-ending battle of making liquidity to the upside, making liquidity to the downside, left, right, up, down, stuff like that, right? So in this case, as the market is going down, obviously we're creating lower highs and lower lows. So what's gonna end up happening is we have the main high up here, right? So we have the main high right here. I'm gonna go ahead and mark this out as the main high, right? Then we have a lower high right here, lower high. We have another lower high because the market pulled back, found a new high, went lower, pulled back, found a new high, and went back down, right? So we have a constant lower high thing, right? So what's gonna end up happening is right here we have a fair value gap. Let's just say for example we have a fair value gap right here, right? Just like this, right? How exactly can you trade this using the inverse fair value gap model that I trade usually on a day-to-day basis, right? It's really easy. Watch this, right? So right here we can see that, of course, we took out every low to the downside as our market was going up, and we have no more room to go lower. So the banks, they got filled at the absolute bottom, which is what they wanted to. So what you would expect now is for buying to start coming a lot more, which the bank's pumping in money, so the market can start going up, right? So what's gonna end up happening here is gonna be just like this, right? Boom. You're gonna start seeing the market flip from being bearish to, of course, not gonna be a whole candle up like this, right? But it's gonna be something that looks like this. You're gonna start seeing a reversal in the trend a little bit more. We hit the fair value gap and so on. So you guys can see right here. Sure, the market is going up, not as fast as it was going down, but it is going up, right? And this is normal. This is known, once again, as a market structure shift. So what I'm gonna do here is I'm gonna label this an MSS. Right now, I wanna kind of ask you guys this. What do you think is going on where I pointed right now, right here? What pattern is this? I'm not looking for a flag. I'm looking for a pattern, right? What do you guys think this is? Bearish? Well, not really, but let me see the bullish. Yeah, exactly. There it is. Right? Yeah, bullish. Okay. Bullish trend. Exactly. Now, why is it a bullish trend? How even though it looks very, very weak and very, very, like small, there it is. Higher highs and higher lows. Exactly. No, it's not a double bottom. This is known right here as a liquidity sweep. Right? We just barely swept it, and I'll explain that in a second. Right? Exactly. MSS plus higher highs and higher lows. Exactly. Right? So the market, it went from creating lower highs, lower highs, lower highs, lower lows, and so on, right? To now forming very small, but they are there, higher highs, higher highs, higher highs. We have the main high, higher low, higher low, higher low. So we know that the market trend is flipping from being bearish to being bullish because the banks, they took out every liquidity to the downside, meaning that we have no more room to go high, to go lower, and now the only thing we can really do here is go up, right? So that is what the step number 3 is, MSS. Now, okay, here's where the real question comes into. MC, is it more common for price to retrace into a fair value gap and continue in the direction? It's, think of it the same way. It's kind of just what you're given. You could do a retracement into the fair value gap, or you can do an inverse. They kind of play out the same way. It just depends what you have. In this case, we have a bearish fair value gap, so we're gonna be looking for an inverse. And I'll show you an example on a regular fair value gap. On wouldn't the first switch in the trend be an MSS too? Well, it depends. Well, an MSS means the market is flipping. That's all it is. It's not really like something to be. I don't know how to explain it. Like, pretty much what MSS is just the market, the trend flipping to the opposite direction. Do you also need to mark out different sessions? Yes, that's very, very important. As long as they have not been filled, yes, very, very important. Yes. What confirms an MSS? Really easy. So, for example, if the market is creating lower highs and lower lows, and it starts creating higher highs and higher lows, that's an MSS because the trend went from creating, lows constantly to creating highs constantly, right? So that's what confirms an MSS. So when you guys are looking for one, you guys should be looking for, you should be asking yourself, okay, are we creating higher highs? Are we creating lower lows? Or whatever the case may be, depending on the trend, right? Exactly, right? So in this case, we'll be looking for an inverse of a fair value gap because what we have right here is a bearish fair value gap. We created this as the market was going down. Of course, since we flipped the MSS right here, right? Ideally, many of you guys would think that, hey, we're in a bearish fair value gap, I should be looking to go short, right? And that's not the case. Why is that? Well, if the market trend is bullish and you have a bearish fair value gap, the reason it's not going to work is because the market already took out all the lows to the downside. Banks, the people that really move the market, right, like the algorithm or the institutions and all that stuff, they're not interested in making the market go any lower because they stopped out everyone that they possibly could, which was right here, right here, right here, and right here. Which you might have noticed, we took out every level of liquidity to the downside, right? So many people, you know what I mean? Like the banks are just not interested in making this rally gap reject and go back down because they already filled all of the stop losses and all of the orders that they wanted to fill, right? So they don't really want to make the market go down. So what's going to end up happening is, although we have a bearish rally gap, it's not really going to get respected how you guys think. What's going to end up happening is we're going to inverse it just like that, right? And this is where my entry model, which is the cherry on top, which is where it comes through, right? So what you guys would do ideally here would be you guys would look for a nice break and hold above, right? You guys, for those in the premium, in my premium, or in this one right here where I'm in, where I'm in the call, you guys might realize that when I put out alerts, it's usually the same way. And like I said, I'm going to show you guys a real-time example right now. Right, so what's going to end up happening is you guys wait for a simple break and close above. Right, it doesn't have to be a candle close. It could just be a strong breakout. Same thing. Right, what you're going to do here is enter right there, place your stop loss at the bottom of the fair value gap, or it could be at any low. In my opinion, I would do it at the low, just like that. Then what you guys would do is, now that the market was on its way down, look at this, guys. This is where it's going to make all of this, a bunch of sense. As the market was going down and it created the main high, lower high, lower high, and lower high, now as the market is going up, banks want to start feeling the liquidity that they made on the way down, right? So you're going to be using every single pullback as your price target. And it'll make sense now when I show you guys a real-time example, but right now it should be making sense, right? So every lower high as the market was going down, or any higher low as the market is making as it's going up, you would use it as a price target. Why is that? Well, simply because that's what the market wants to go ahead and target. Maybe it wants to target this lower high and go back down, maybe this one or this one, right? So these will be your price targets, right? And you would enter off the inverse of the fair value gap, which would be this one right here, right after we get the MSS. Now, let me kind of catch up with you guys. So far, let me know how you guys are understanding this. Is it perfect? Is it kind of making sense? Or is it just not making sense at all? Let me know. Because right now, I'm about to move on to the real examples of the 1 month winning streak that we had, to really show you guys how I did this exactly. Making sense? Perfect. Okay. Right, does it apply to options? Yeah, it does. It applies to anything in the market. Because what we're doing is we're trading liquidity, which is what moves the market. Right? Makes perfect sense? Perfect. Okay. Learned more here in here than high school. Bro. Makes sense? Okay, yeah, I'll do that right now. Okay, so what I'm gonna do, both for my YouTube and for the people on Discord, is I'm gonna go ahead and bring up my recap. Right? This is the 1 month recap that we've been on. I haven't done the one for today, but you guys get the example, right? So I'm gonna give you guys a few seconds, right? I'm gonna go ahead and do this real quick. I'm gonna give you guys a few seconds. These are the trades from this month, not even for the month of August, right? I'm gonna give you guys a few seconds. I want you guys to choose which trade. Just give me the date, right? It could be, give me the date or the point of the trade. Give me one day that you guys want me to review, and I'll review it, right? Any day. On YouTube, I'll wait for you guys to put out a number 2 as well. Oh wait, you guys can see me. You guys can't see it because of my face cam. Hold on. Let me put this right here. Okay, there it is. Okay, I want you guys to go ahead and choose any of these trades. I'm gonna give you guys some time in the Discord, and I'm gonna give you guys some time on the YouTube. 9 out of 9. Okay, so you guys want me to review 9. This 100% point trade, bro. Someone said 911. All right, come on, bro. 911. Okay. Oh, okay. 220. So let me see what the Discord is saying. All right, so I'm seeing 99, 911. Let me see. Yeah, so on 911 we call it a 220 point trade. Yes, that is true. Okay. Let me see what the Discord is saying. 911 is crazy. No, I mean we literally caught the trade on 911. Okay, so I'm seeing a lot more 911s. All right, so I'm gonna try to do one. If I have some more time, I'll do 2. But for now, I'm seeing a lot of you guys saying 911. Bet. Okay. Who's trying to see the 4-point trade? Bro. Okay. So we're gonna go ahead and do 911, right? What? Not like that. Wait. Pause. We're gonna do the trade recap for 911. There it is. My bad. Okay. So 220 point trade on, Okay, so the first thing I'm gonna do is I'm gonna go ahead and open up. I'm not gonna open up the future alert. I'm gonna go ahead and open up the commentary alert, right? In the premium, obviously, the daily recap channel is not included in the premium. No. The daily recap is for everyone. It's for you guys to see how we do every single day. It's right here in this channel, right here, daily recap. Okay, so what I'm gonna do is I'm gonna go over to the commentary channel and go over to September 11th. Let me see when I did this. I'm gonna see exactly what I saw on that day so I can kind of get an understanding. Right, so September 11th, it was we caught this trade at. Wait, hold on. Give me 1 second, guys. Let me kind of like. Let me see, September 11th. Right here, right. So we ended up catching a. Right here. Okay, got it. So we enter at 11:45. Okay, so 11:45. I'm gonna delete all of this. Wait, matter of fact. Let me screenshot this for you guys so you guys can have a reference picture. Okay. What's your Instagram? Here. Here it is, my boy. There it is. Okay. So I'm gonna go. Guys, save this picture, guys. It's very, very important. This is my strategy, pretty much my strategy, right? I'm gonna send it over to my Discord as well. Hold on, just so you guys can have have a reference. There it is. There it is. Okay. Now, what I'm gonna do is I'm gonna delete all of this because this is the example of my Let me see. Anyone in David's Discord know if he takes more than one trade? It's usually 1 to 2. 1 to 2. I do live trade though. In there though, I live trade. Okay. So once again, I'm making sure you guys have the picture. I sent it over to my Discord and I sent it over to this Discord as well, right? Are you identifying any time frame works? I think your name is Special. Yeah, Special. Any time frame works. All right, guys. Okay, so I'm gonna go ahead and delete this. Now I'm gonna go over to September 11th, which was pretty far, or not really that far, but right here, September 11th, right here. Perfect. Okay. September 11th, right here. Okay, so what I'm going to do here is we ended up entering at 11:45. So what I'm going to do is, of course, expand the time frame a little bit back and see exactly what we're looking for. So what is the first thing I always do when I go ahead and try to find a trade? Well, the first thing you always have to do is go on the higher, not the trend yet, not the trend. What you're going to do is go on the higher time frame and identify exactly where the levels of liquidity are in the market, right? Because this is where, pretty much, like I said, guys, what the drawn liquidity levels do in the market is it tells you exactly where the market has room to go to and where exactly the market can bounce from, right? So if we go over to my to the commentary, right, which is right here. If we go over to the commentary, you guys will see right here that I went ahead and said, okay, right here. Here's my trade breakdown, right? I'm gonna kind of break it down from here. It's gonna be so much easier. But yeah, here it is. Okay, so right here at 11:22, was it 11:22? Yeah, right here. 11:22, I went ahead and told everyone, okay, NQ is in a very interesting spot right here. Now I took out majority of the drawn liquidity to the downside. If you guys look at the chart, we took out drawn liquidity 1 right here. We took out drawn liquidity 2 right here. And we went ahead and took out drawn liquidity 3 right here. So we took out 3 levels of liquidity on the way down, hence why the market was in a downtrend. And of course, as the market is in a downtrend, we're creating drawn liquidity to the upside. So we have the main high, lower high, and so on. So if we go ahead and look to inverse this fair value gap right here, we would ideally look to target liquidity 1, 2, 3. That's simple, right? So although the market is dumping down, why am I looking for longs in this case? What's really easy, right? Like I said, the whole reason behind this is because now the market dumped so much and it took out majority of the liquidity to the downside. The banks are not interested in pushing the market any lower. If anything, they want to push it higher to fill the liquidity that they made on the way down, right? So what I went ahead and told everyone here is with NQ taking out all these levels of drawn liquidity, it doesn't really seem like it wants to go any lower, even though it seems like sellers still have the control. Like I said, we're seeing a whole lot of selling, but in my eyes, I don't believe it wants to go any lower just because, of course, we took out all of the liquidity and there's no other levels to really take out to the downside. Right, so what I said right here is I'm going to keep an eye on NQ to see if buyers are able to take control here and form an MSS, as I do believe that if NQ were to bounce off anywhere, it would be right here. Why is that? Because once again, we took out liquidity and in my eyes, we just didn't have any more room to go lower, right? So what I said right here, if NQ wants to go ahead and sweep this final level of drawn liquidity and start forming an MSS back to the upside, I'll be using this 5-minute bearish fair value gap for an inverse to start looking for longs to target liquidity to the upside, which is on these levels, which is what I have marked here. So once again, for those that know what a fair value gap is, right? The fair value gap is right here. This candle is more than 40 points. So in my eyes, it's a valid fair value gap. Now, you guys might be wondering, oh, isn't it a bearish fair value gap? Shouldn't I be looking for shorts? No, because if buyers have control, they're going to simply inverse a space where sellers should be taking control because, once again, buyers have the trend, they have the control, right? So in this case, we will be looking to inverse this bearish fair value gap. It's that simple. Right, so let's see how this ended up playing out. Right, so right here, once again, look how easy this is, guys. Right, so we took out some more liquidity to the downside, which was down here. We took it out, and now we start seeing a lot of buying coming in. Right, I'm like, okay, well, if you guys want to go ahead and start looking to enter your longs, you can go ahead and take an entry point off this inverse. Right, but here's where this trade got a little bit tricky. Right, and I know a lot of you guys are gonna have this question, which is, okay, if I'm inversing one fair value gap and there's one above, which one should I inverse and which one should I take, right? Which one should I enter off of? It's really easy. right? There's two ways you can go about it, right? In this case, in this trade, I'm really glad you guys chose this trade because I can show you guys the perfect example. But in this case, you guys can see that there's two fair value gaps. There's one right here, and there's another fair value gap up here, right? So which one should we be taking? Well, it depends on the type of trader that you guys are. I know a lot of you guys are a really risky type of trader. You guys like to enter at the absolute bottom and just risk your money without the most confirmation, which is fine. You know what I mean? Everyone has their style of trading. Or there's the people that like to trade a little bit safer and make sure that the trade looks as perfect as it possibly could, right? So if you guys are the risk takers, you guys would ideally enter off of the first fair value gap you would see, which will be this one. If you guys like to stay a little bit safe, which is what I like to do, you guys can always take the entry off of this fair value gap up here. Why is that? Well, if we inverse this fair value gap right here, we have a whole nother fair value gap right above it, which we could just reject right back down, and you have the chance of going red, right? But if you guys want to wait for all of the fair value gaps above, which is this one and this one, the only two, right? What you would do to be a little bit safer is you would wait. Of course, you're gonna get a way later entry, but you're getting more of a confirmation of the trade going your way. So in my eyes, I would have entered off of this inverse fair value gap right here, just because you would have more confirmation, and it will make the trade just perfect. You guys might know me for my consistency, right? That's what I'm known for. A lot of you guys, join my server, join my community, because you guys see the wins, right? And of course, as always, you guys know I'm human. Before I say anything, I lose, everyone loses, I'll be wrong, So before you guys think I'm a robot that only wins, no, that's not what it is, right? Keep that in mind. But in this case, you guys know me for taking my perfect setups. If I don't see anything for 3 days, I will not take anything for 3 days. That's just how I am, right? So in this case, what I would do is I would take the inverse off of this one, because if we inverse this, we have nothing stopping us until 825, 869, and of course 927, right? So what I told everyone is, okay, if you want to take the risky entry, of course you could take it off of this one. But if you guys want to take the way safer entry, you guys, here I broke it down, you guys can see that I would have entered off of this one, right? Right here I said, okay, we swept drawn liquidity, buyers are stepping in, we formed that possible MSS. Why is that? Because the market went from creating lower lows, lower highs, lower lows, lower highs, into creating higher highs, higher lows, higher highs, higher lows, right? So here we have the MSS. Now that we know that the market swept all of the deal well to the downside, we have the MSS, but we have this fat fair value gap holding us down. What we're going to be looking for is going to be a simple inverse off of this fair value gap, and we're going to target liquidity 1, 2, 3, just like that, right? That's why I said this, right? And right here, let's go ahead and see, boom. So here you guys can see we went ahead and inversed this fair value gap, which is the risky one, right? And then we inverse the second one, which is going to be the safer one. Here is where I told everyone to go ahead and enter the position for the safe people, right? And target liquidity above, right? So here it is. Here's the entry point where I told you guys, okay guys, you guys can go ahead and enter, all that good stuff. Here I said there's the inverse of the fair value we want to see on NQ. Ideally, what we want to see here is for buyers to start stepping in, blah blah. You guys know the deal, right? If you go over to the futures alert, look at exactly how this trade played out for the commentary, right? We ended up hitting all of the drawn liquidity above for about 220 points, just like that. So you guys see right here, we inversed the fair value gap 1, right, which you guys would have made a lot more, right? But if you guys want to be safer, you guys could have inversed this one. You took longs off this push up, boom, you hit all your price targets, and you are one and done with the trade for 220 points, right? So let me ask you guys this in the chat and on my YouTube, guys. How much did this trade make sense? Did it make sense, or was it too confusing? Stuff like that. It made sense. I'm seeing one yes. Of course. Where's your stop loss for a safer entry? For me, usually I tend to place about a 20 to 25 point stop loss. If you guys look at my alerts, you guys will see the pattern. It's usually 25 points around there, right? Makes sense. It made dollars. Perfect. Wait, why wouldn't you have gotten stopped out? I think I did. I got stopped out before the price targets got hit, I'm pretty sure, or most of them. How do we know it's going to reverse from here? Because the market formed an MSS after the sweep, so we knew that the trend was flipping back to the upside. So all we need to do is simply inverse the one thing holding us down, which is the bearish fair value gap. Once we inverse it, you take your longs and then you target liquidity above. It's that simple. I have a question. Are those lines? Yeah, they are. Yeah, highs and lows. Exactly. Yes. Do you trade NQ or M? I do M and Q. M and Q. And my question: why don't you enter on a candle close? For me personally, I don't like what time frame. Any time frame works. I usually trade off the Dave. I do it off the 5 minute. But I tend to do it. What's it called? I enter when the candle is just breaking above. I don't really see closes being so, it's it's really hard to mark out our sessions. It's pretty easy, bro. Just mark out any high and low that you see. How much you risk per trade? I do about 400 risk. So if I ever get stopped out, and you guys are wondering how much I'm down, it's usually around 360 to $400. Yeah. Yes. Yeah. Be rich. Yeah. Hey David, how do you prevent FOMO while bro? Just trim. I'm sure your name is Joshua. Just trim, bro. You guys might realize that when I alert, I always tell you guys trim here, trim there, trim here, there. What that does is instead of you getting out all in one push up, you're taking partial profits and you're leaving some contracts to possibly go higher, right? And if it goes down, you have a break even stop loss, so you're not really risking anything, right? So that's your job as a trader exactly. Like Wavy said, your job is to minimize your losses and maximize your wins. How do you do that? By trimming and exactly trust your strategy. It's that simple. Question: would you not be concerned that there's liquidity in the area that could have rejected? Are you talking about this one right here? Let me see. Are you talking about this one? The 825? If that's what... Okay, look. The reason we have price targets here is so we can take profits, not all of them, but partial profits at these levels. Because the reason we have these levels of liquidity, they're not just random levels that I just put out on the charts for it to look fancy. No, these are levels of liquidity. So, let's say for example, the market takes out 825, right? We take it out and we go right back down. What can happen? Well, what could happen is we swept one level of liquidity and the market just wanted to go down. What would happen is you take partial profits at 825 and you move your stop loss to break even. Meaning that if you took profits up here and the trade went against you, you will get stopped out at $0, meaning that you still make money from the trade going up for the contracts that you sold, if that makes sense. You're pretty much just taking partial profits and just minimizing your risk as you go up, right? So if that's what you're wondering, that's exactly what I meant. Yeah, exactly, bro. Guys, taking partial profits is literally the best thing you could do. In my opinion, honestly, it's the best thing you could do as a trader. First of all, you're taking profits. You're learning how to be disciplined to take profits and not be greedy. And second of all, you're just letting your trade just do its thing without you risking any real money. Like, no matter if the trade goes against you or not, you're still gonna be green. Like, no matter what. And that's the beauty of taking partial profits, because you're pretty much making guaranteed market. I mean not market, money, right? Or profits. You're making guaranteed profits, because the sky's in the market. The sky's the limit. Like if you move your stop loss to break even and it just keeps going up, you're gonna keep making money, right? But if the trade goes against you, you're gonna get stopped out where you entered from, and you're still gonna be green from the first partial profits that you took at PT1, right? So in my eyes, the best thing you could possibly do as a trader is take partial profits. Let me see. Let me see. Hold on. Let me read this. I guess the low on the left might make me think that there's not. It depends. But the thing is, the whole reason I wasn't bearish is because the market just had no more room to go lower. I mean, we took out all the levels of liquidity to the downside, right? So there's no more room to go lower. That's why I was so bullish there, right? Usually, do you use the previous session highs and lows? Yeah, I literally use highs and lows from even a year ago if I have to. You know what I mean? So any high and low, as long as it has not been filled, it's good. For example, let's say we have a higher low right here, right? We can see that it's been filled right here, right? So is it going to be valid? No, because we already took out the level. But if we have liquidity up here, we know that it's a valid level because we never took it out. But when the market takes out that level of liquidity, just like this, it's no longer going to be valid because that level is pretty much a random level. We already took out all of the liquidity that was waiting to be filled on that level. So that's why as the market goes up, I tend to delete my levels as it goes up, if that makes sense. Exactly. They're just saying that don't trade your P&L. It's not even a saying, it's a thing, right? Don't trade your P&L, trade the charts. When you guys are trading, don't focus on the money, right? Because that's just gonna make you more emotional, and your job as a trader is to be as is that a word, emotionless? I think it is, yeah, as possible, right? Just don't trade with emotions. Don't look at if you guys have the choice to hide your money, hide it. You guys, the money will follow. Just try to read the charts correctly, right? Don't just place a trade because you want to make 20 bucks. That's not how it works. Oh yeah, right here, bro. There was no liquidity in this range. The only level of liquidity was at 825. I'm gonna call you Ski. Yeah, Ski. Tasky. Right? The only level that can really hold us down is 825 at this line right here. right? This range right here, there's nothing stopping us because there's no liquidity or any point of rejection like a fair value gap or anything. Do you say that? Do you trade at the same time every day? Yes, I trade every single day on my YouTube and on my Discord at 10 a.m. EST. Now, if you guys, of course, wanna go ahead and you know, go through, like, for example, today I was live on YouTube catching the trade that, you know, we were watching. You know what I mean? It was this one right here. You guys can see I told everyone, oh, I'm in. I'm commenting through a trade. So if you guys, of course, are interested in joining my lives and all that stuff, you guys can find the link right here or in the YouTube. But YouTube has a 2-minute delay. For those that don't know, I have a 2-minute YouTube delay, right? Because, you know, I can't really put out too much free stuff, too much value, because it'll take away from the premium. But yeah, it's all here. It's all here, my man. Okay, let me catch up with the chat. I'm down to learn to. Yeah, bro, it's normal, bro. You gotta see the worst before you see the best. You know what I mean? YouTube link is right here. It's right here. It's right. Do you have live commentary in Discord? Yeah. On the lives, it's more live because of course I'm literally talking over it, but I have it all right here. I have it all right here. Now, I think we have, yeah, yeah, I do. Okay. How long have I been live? 55. Okay, we have time for one more review. Okay. I'm going to bring up my trade recaps one more time. Right? And I want you guys to choose just one last trade. Do I use trade? I do. Yes. Yes, I do. I want you guys to select one more. And by the way, guys, for those that don't know, if you guys are interested in getting a funded account, use this code right here, 4 points, bro. Use this code right here for 80% off. If you guys are interested in getting some funded accounts, it will give you 80% off and a 1-day pass for you guys to, of course, get everything set up for your funded account. I use funded accounts. I use 13 funded accounts. But okay, here, let me go ahead and put this one. Someone said today's trade. Would you guys want me to review today's trade? Or would you guys want me to review a trade from the past? Here, I'm gonna give you guys some time here to select. And same goes for you guys on YouTube. All right, so you guys can either choose today's trade, which is about 60 points. You guys can choose this one, whichever one. But the one that we covered was this one, so I'm gonna go ahead and highlight it. Right, boom, there it is. So I want you guys on YouTube and on Discord to go ahead and choose whichever trade you guys want me to review. I'm gonna do it pretty fast so we can call it a class. But yeah, go ahead and choose, guys. I'll give you guys like 30 seconds. In the meantime, I'm gonna go get water, right, guys? So I'll be back in literally 30 seconds. All right, hold on. All right, we back. All right, okay. So let me see what you guys chose for today, or for the final recap of the day. All right, so I'm seeing someone say 9.99, 9.5 today's trade. Someone said 9.5 here. And 7 points. For those that don't know, ES moves differently. So 7 points is like 70 points on NQ. Today. Okay, we're gonna do today. Today's NQ, please. No further. Okay, we're gonna do today. Okay, so for the people that chose another day, we'll do it tomorrow. All right, guys. Today's trade. Okay, so today's trade. Let's see how. Let me show you guys how easy it is. Right, you guys remember the strategy, right? In inverse, we look for an MSS. We look for all that. Right. Okay. So what we're gonna do here is I'm gonna go ahead and take this out. Right, and I'm gonna do this live with you guys. Right, so it might take a little bit longer, but let me see. Let me restart the church. Okay, so we took the trade today at. Let me see when we took the trade. So we ended up taking this trade at 9:53. Damn, we took this trade early. Wait, no, that wasn't. I was about to say. Wait, what? Okay, here it is. Okay, so we took the trade at 10:09. And then we got out of this trade at 10:27. So 10:09. So what we're gonna do here is whenever we play this back to 10:09. Wait, what? 10:09. Monday, right here. Okay. Wait, what? No way, it was this choppy. Oh, right here. Okay, I see, I see. Perfect. Okay. So what we're gonna do here is, okay, here's what we're gonna do. I'm gonna go ahead and chart this. I'm gonna chart how I did it today before I got on live, before I did everything, right? I'm gonna show you guys exactly how I'm able to find my levels and everything that you guys need to possibly find your setups for the day of, right, guys? Remember, today's trade. This is today's trade, right? So here's what we're gonna do. We're gonna go over to, as always, the way I find my levels of liquidity is I like to go on the higher time frame and then one by one go slowly down. So I'm gonna start on the 1 hour, go over to the 30-minute, go over to the 15, then the 5, right? So the 1 hour time frame. What can we see here? Well, remember, guys, this is before the market went ahead and opened, right? So what we're gonna do here is, of course, we know that we have liquidity right here because this is the highest point the market has gone to, right? And we can see obviously that the trend is a bearish trend, which is step 1 to the strategy and step 1 to charting, right? Now, we can see here that obviously the market is creating lower, the main high, lower high, lower high, lower high, and so on, right? So what we're gonna do here is mark out this one. We're gonna mark out this one because this is the high. You wouldn't do this one because we already took it out, right? So you'll do 395. You would do 293 is a pretty good one, and then you can mark out this one if you want to, but we're gonna focus on these levels. Now we gotta focus on the downside. So obviously we know that the market just finished bouncing off this 119 level. Do we have any other ones right here? We already took out this one, so this one you wouldn't mark out. You will mark out this one right here at 20,064. You will mark out this one at 953, because obviously you guys can see that the market is in a weak one, but it's in a bullish trend, right? We can see this because as the market, let's say for example we have the low right here. We push up, pull down, find this lower, higher low, push up, push down, find this low, which we already took out right here. You know, we find the low, go back up, find a new low, go back up, find the new low, which we already took out, and so on, right? So you guys get the hint, right? So let me see if I marked out this one, it'll probably be better. Okay, so before the market reversed right back up here, we know exactly what the trend is right up. We know what the market might want to do off open. Why is that? Well, look at this 135 level very, very carefully, guys. So what's happening here is, I'm sure you guys know this, it's very, very easy, right? What's gonna happen is the market is obviously in a bullish trend, right? So we have the main low, we push up, we go down, we find a new low, push up, go down, we find a new low, push up, go down, find a new low, push up, down, low, right? So this right here, right? It'll play the same way as every other one, but what the market is doing right here is it found this new main high up here and pushed down. Then we went ahead and took out the one of the main levels of liquidity right here at 135. So what can you guys see that's happening right here? Well, obviously the trend is bearish because the market is creating lower highs and lower lows. Then we took out liquidity down here, and out of nowhere we start seeing a lot more buying coming in. If you guys go on the smaller time frame, you guys will see right here, right? So we took out the liquidity just right here, right? You guys can see right here, right? We took out this liquidity, and then out of nowhere we start bouncing right back up. Why is that? Because the market is creating a very, very nice bullish, or MSS, right? It's a bullish trend, MSS, same thing. How do we know it's a confirmed MSS? Well, first and foremost, we took out liquidity and we start seeing a lot of buying coming in. With a lot of buying coming in, we need to make sure that the trend is bullish. How do we know this? It's really simple. We know this because the market is creating the main low, higher low, higher low, higher low. So the market is constantly creating higher lows and higher highs as the market is going up, which means that the trend is looking not the strongest, but it is bullish technically. Meaning that if the trend is bullish, we want to go ahead and start looking for liquidity to the upside. Now, on the 5-minute time frame, you guys remember we marked it out on the 1 hour, but on the 5-minute, you guys will see more of a reading here, short term at least, that we have some levels of liquidity nearby to go ahead and take out. Right? So what we're going to do here is, now that we know that the trend is bullish, we want to start looking for levels of the market that it could possibly target and go right back down. Right? This is known as another liquidity sweep plus MSS. Right? So what we're going to do here is, obviously we're going to start off with the highest point. Right? We have a high up here, right, which we're not really going to be focused on. We have another high right here, which is a good one, right, because the market pushed up, found this high, pushed down. Right? We have another one right here, and we have one more right here. Why do I have these levels? Well, first of all, this is the highest point before we dump down. We pulled back, found this high, dump down, pulled back, found this high, dump down, and so on. Right? Of course, I'm not going to mark out this one because we already took it out, and it's really not important. Right? So what we're going to do here is, keep in mind, guys, the market has not opened yet. Right? In this candle, it's only 9:20. Right? So I'm going to give it 2 more candles right here. Boom. So maybe I went 2 back. Okay, so in this case, right here, you guys can see that the market went ahead and took out 2 of the 3 levels of liquidity, right? Ideally, you guys, if you guys were going to be in longs, you guys should have entered some way around here. But in this case, I didn't enter longs because, of course, there was no setup. Sure, you guys could have taken this fair value gap, but I'm like, you know what? I'll just save it. You know what I mean? It's not even a good one. It's a 24.1, right? But anyways, the market just opened right here at 9:30, and you guys can see that we took out 2 of the 3 levels of liquidity nearby, right? So what tends to happen? Well, we're not going to be looking for longs anymore. Why is that? Well, the whole point of this push-up was to take out liquidity to the upside and see what the reaction is right after. So what we're going to do here is, since we took out this one and this one, we're going to see, okay, obviously we have a fair value gap being formed right here. How do we know it's a fair value gap? Well, if you guys really look at this and you measure the candle, you guys will see that it's a very nice 64.50 candle, right? You guys know anything more than 40 points is a valid fair value gap, at least on the 5 and 15 minute time frame. Of course, the higher the time frame, the more you should expect in the candle, right? Because of course the candle is going to take a lot longer to close, and you guys get the deal, right? But on the 5 minute, it should be more than 40 points, which in this case it is. It's about 64 points. So what we're going to do here is, you guys see we took out every level of liquidity to the upside, meaning that we shouldn't really be looking for longs anymore because the market already took out all of the magnet levels that we had already set aside, right? So we have liquidity 1, 2, 3, all got taken out in a span of 2 5-minute candles, right? So in this case, since we have no more price targets to the upside, we don't really want to be looking for any more buys, right? We want to start looking, of course, let's go ahead and mark out this fair value gap. What we're going to do here is we're going to start looking for a possible, once again here, let me mark this out so it can look a little bit better. So we have DOL, right? We have DOL right here. We haven't, well, we kind of swept it, right? So this right here will be known as a DOL sweep, right? So why is it a sweep? Because we took out the level right here in this wick and we're going right back down, meaning that everyone that had their stop losses placed at this high up here, they got stopped out. That's it. They got swept by the market, right? So what's gonna end up happening here is DOL sweep, boom, just like that. Now, we don't have an MSS to the downside just yet, so we're not gonna be looking to inverse this fair value gap just yet. What we're gonna be doing is we're gonna be waiting to see if any sellers can really step in. So let's see how that goes, right? So we can see some buying still coming in. You know, buyers are still trying to step in here, but you guys see how much buying we had here. Look at the reaction here, and then look at the reaction after we took out the level. You guys see how buyers are getting a little bit weaker by the candle. They're getting weaker because we already swept the levels. There's no more reason for us to go any higher, right? The algorithm or the banks or the buyers or this or that, they're not interested in making the market go any higher because we took out the majority of the levels of liquidity, which is going to be this one, and this one. Meaning that as the market was going up, you would ideally target liquidity. You could do liquidity 1 right here, you could do some here, and you would do some here. I'm going to go ahead and delete this level so it can look a little bit cleaner, but there you go. So now that the market took out every level of liquidity to the upside, you want to start looking for it to take out liquidity to the downside, which would be at 167, 147, and 119, right? So what you're going to do here is you're going to go ahead and wait for the MSS to form. Of course, we're forming a really nice high up here. You guys see we have rejection, rejection, rejection. We have 3 rejections right here, right? So this is going to be considered our main high. Yet we don't know that yet, but that's the idea behind this, right? Now, if we reject back down, you guys see we start creating, you guys start seeing how we start breaking these lows and we start making more lows to the downside. So this right here, after the sweep, we're signaling a MSS. Wait, let me see. We're signaling MSS. It's not confirmed yet because, of course, we're working with 2 red candles, which is not the best, but it's an idea. You know what I mean? Now the next candle, let's see what this does. You guys see another red candle. So obviously we're creating lower lows, lower lows, lower lows, right? And if you guys go on the 1 minute, you guys see, yeah, we're creating lower lows, lower highs, lower lows, lower highs, lower lows. So the trend is obviously bearish. So here, although the time frame is a little bit small, we do have the MSS being formed right here, right? So all we need to do now is wait for a simple inverse off of this fair value gap, and we target all of the liquidity. Of course, don't expect all of them to get hit, but expect at least one of them to get hit because that's why the market is going down, right? So what we're going to do here is we're going to look to take shorts right here. We will place our stop loss at like a 25-point stop loss, which is where I got the 207 stop loss, I believe. My stop loss was placed at 204. Oh, that's right. Okay. So right here, you guys see. Let me see. It was like this. Boom. Right? So we went ahead and entered off of this breakout right here. right? We entered off of the break. Of course, it might not look that pretty right here because of course the candle didn't close and all that stuff, but we entered, right? And matter of fact, hold on, let me pull this up live because I was live trading this today, so I can show you guys real time, right? So you guys can see exactly how it looks like. So it was right here, right here. So this is when I told you guys to enter. It was, let me see, right here. I'm like, okay guys, I'm gonna enter right here, right after the sell-off. So this is how the market looked like real time, and then of course right after it kind of wicked out a little bit, but it's fine because we never got stopped out, right? So my stop loss was placed at where the market rejected from most recently, which is at 204, just like this. So my stop loss is placed up here, right? Hence the signal on the in the Discord, stop loss at 204, right? 204.50, right? So what we do here is, now that we did our job in the market, all we have to do is let the market do its own job, which it did, right? You guys can see right here, show this candle might have gotten a little bit close, right, to our stop loss, but thank God it didn't. Wait, matter of fact, we missed our stop loss by 2 points. Damn. Bro, I was shitting bricks. I'm not even gonna lie to you guys. But no, real shit, real shit. Here, you guys can see that obviously, yeah, the market went ahead and went down, took out majority of the liquidity, but you guys might realize we didn't hit the final one, which is fine. Right, the market just reversed right back up. It's fine, right? Because as the market is going down and hitting your price targets, we're taking partial profits and moving our stop loss to break even and so on, right? So this is exactly how the trade ended up playing out, just like this, right? And hence the 60 point trade that we ended up catching, right? So let me ask you guys: did this make sense to you guys? Did today's trade make sense to you guys? How do you cut the stop loss? What do you mean by cutting it? Yeah, it was dope. Yeah, show you just your stop loss. Honestly, I just move it to break even. So when it hits PT1, which will be like around here, I just simply moved it to break even, just like that. So I move it just like this to where I entered from, and that's it. How do you know when to leave the trade? If it never hits your stop loss, it's noise. That's it. If your stop loss has not been hit, hold the trade. That's why you have a stop loss. You know what I mean? Don't just get out of the trade if you're not gonna hold it. You know what I mean? I mean, if it hasn't stopped you out. If your stop loss is around 400 on MNQ, what is your? I don't do NQ. I only do MNQ. If you get swept and see the market going your way, do you re-enter? It depends. Yeah, there's been times where I've re-entered. This is my first time watching you, and this is the perfect explanation. I want to backtest you for a bit. Hey, look. By the way, if you guys are new and you guys want to backtest my strategy, guys, I have a million other classes right here. I have a million other classes that you guys can learn from. Out here where I made X amount a day, X amount a month. There's like a million videos. So if you guys want to learn my strategy right here, $500 a day, it'll be right here. So here, if you guys do want it, here you go. Here you go. It'll be this one. You can check out my YouTube, and of course, if you guys have any questions on my strategy, guys, send me a DM, hit me with any questions. There can be a million questions. I do not care. I'll help you guys. Can you explain what MSS means? Yeah, it's right here. Where's the picture? Hold on. The picture is right here. Actually, no. Matter of fact, wait. This would be a lot better for you. Understanding MSS. Right here. Okay, there you go. There you go. Also, how do you know if the order is filled on TradingView? I don't use TradingView. I use Tradivate. But yeah, guys, hopefully this class, hey, thank you, Eric, bro. Thank you, my man. Thank you, my man. Took the trade on NQ, bounced off the New York target New York high, got in at 3:20 p.m. I think that was a good trade, even though it played out in our favor. Okay, so at 3:20 p.m. Let me see what you took, because I did see the market did push up on the last second, right? 3:20. What'd you enter off of though? Was it off of a fair value gap? Was it off of a DOL sweep? A breakout, a trend line? What do you trade? I need to see what you trade mainly. Bro, yeah. How can I trade some of your trades and input the stop losses quick? Okay, if you're trading on Tradevit, you could just click where you want to get stopped out. It's really simple. It takes a few seconds. Why don't you enter earlier? Cause I don't like to be risky. I like to wait for my confirmations to come through. Noah. Let me see. What changed your mind to go short? At least in the morning, we didn't really have any room to go higher because we swept liquidity. Um, so yeah, I mean, in my eyes, we just got very weak around the level of liquidity. Which, yeah, Diego, yeah, that's right, that's right. Yeah, no, we had liquidity and we swept it. So I'm like, okay, we're sweeping it, we're forming the MSS, and we're also inversing a very strong bullish rally gap. And I was right. I mean, the trade went 60 points. So I'm not gonna say I was wrong. Um, what does Diego mean? Drawn liquidity. Once again, here, this video should help you out. If you just joined the class, there it is. Can you show your view from Tradeovate and how you trim? Yeah, I have a video on that here. There you go. But yeah, honestly, I would say that's enough for me, guys. You don't use TradingView to trade though, right? No, I don't. I don't. Just to chart. And TradingView has a huge delay. That's literally why I don't like TradingView. Yeah, I have a video on everything. Yeah, it's on here. It's on here. How much you need to start trading futures? I would say if you're gonna do a live account, do like 500 to 1,000. If you don't have that money, of course, not everyone has that money. You could do a funded account for $33. Now, if you guys need a $33 funded account, you guys can always use this code right here for 80% off. It should help you guys out. Right here, 80% off. There you go. Much love, bro. How often do you do these reviews? I used to do them daily, but your boy got busy. Now I'm trying to slowly ease my way into doing these classes live. Did you guys really like? Would you guys want me to do one? Let me see. Oh, thank you, bro. Thank you. Which platform do you? Apex. Apex is my favorite one. I love Apex. They pay out on time. They do everything on time. I love Apex. A lot of people don't like Apex, and that's fine. Just me personally, I like Apex. Yeah. Hey, bro. I'll see you in the live tomorrow, my man. Take it easy, bro. Take it easy. What's a prop firm? Prop firm is when a company gives you money to trade with, so you don't have to trade with your own money. That's pretty much what it is. So think of it as a loan, but not really a loan. Like it's a lot less risk free. Yeah, like a funded account. Yeah, a funded account. Yeah, yeah. Yeah, because of course you're paper trading. That's where there's gonna be a huge delay. Have you looked into doing prop firm challenges live with people like maybe one time a week? Um, Not really. I mean, I don't see why I should do that. Thank you, bro. Debo. Wait, Debo, are you in mine? You are, right? You are. Yeah, yeah, Debo. I've seen your name around. Hold on, let me see. Hold on, I got some pings here. Look at that. Yeah, no, wait. Oh, no, bro, you're not. Wait, what? I thought you were. I'm not. Oh, yeah, bro, of course. Yeah, of course, of course. I thought I've seen your name around. Maybe it was in this server. Have you tried a small account challenge? Nah, but those are bullshit, bro. Bro, that don't fall for that. How do you I do micros. I do micros, bro. I'm not gonna risk. I'm not gonna sacrifice me making the money that I'm making on a regular basis to do a little challenge to prove a point. I could care less. You know what I mean? I'm here to trade and make money. I'm not here to do little challenges and entertain people. You know what I mean? But yeah, I'm good off that. Um, you doing a live at the same time tomorrow? Yeah, same time tomorrow at 10 in the morning for the live trading and 4 p.m. for the class. 4 p.m. How do you choose if you're trading NQ or ES? I always do NQ. I don't like ES at all. W class. Hey, bro. Diego, bro. I'll see you tomorrow, my man. I'll see you tomorrow in the live, bro. Let's make some. Let's keep making some money. Today was good. Today was good. Can you follow your trades at 10 a.m.? Yeah, you can. Ski. Yeah, you can. Uh, have you thought about making? I don't like take profit yet. It just came out. There's not enough proof behind it, so I don't know. Looking to fund it. What's simulation? It's pretty easy. It's not the hardest. When you say trade micros, what do you mean? Can you send a video for that? Just trade this one. MNQZ4. This is the one I trade. Hey, bro. Of course, Upon. Upon. That's your name, right? Upon him. Upon him. Yeah. How long did it take for you? Okay, I didn't always trade this strategy. I used to trade support and resistance breakouts and trend lines and all that stuff. But with this strategy, honestly, I slowly implemented it into my trading. So I would say about like 2 years, maybe 3, around there. Because I didn't always trade this one. Same day payouts. I've same day payouts. They're I don't know. I don't trust them enough. But yeah, no, I don't really care about take profit. I'm fine with Apex. I don't need to switch prop firms. There's really no reason for me to do that. Um, make some money off your signals. Money, hey, bro. Appreciate you, bro. That's what I like to hear. That's what I like to hear, my man. What platform do I trade on? I use Tradevate. Tradevate. Can you trade futures on your phone? Yeah, you could, but I wouldn't suggest it. I would recommend a computer 1,000,000%. No, Apex is not rebranding. No, 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 no. What do the challenges look like when going to a friend account? They give you a 50K account, you have to make $3,000. Do you have a YouTube video on your strategy? Bro, 1,000,000 videos. Yeah, right here. Right here. Like, I have, like, not hundreds, but obviously, I have about, I would say, like, 20 videos on my strategy. They're all here. Like, I made 5,000 a day, 20,000 a month. My trading strategies got easier. I have everything on my YouTube. So yeah, if you do need it, here it is. Bro, damn, you guys are going crazy in the chat. Hold up. How many macros do I do? 15. Oh, bro, not all of the liquidity got swept for sure. It did. It did. Just not the one that you were expecting. What made you not wait for a candle close on the fair value of today? I don't really trade candle closes. I just trade candle breakouts. I need to see this a little bit more. I don't know what this is. You have to zoom out. How long did it take to pass the funded account? Like 2 weeks. It takes usually. Yeah, I do trade futures. Yeah, the streaming also come with an institution. I just stream whenever I want. Kind of. It's kind of like a thing where I just click the button whenever I want. But you have to do that price targets. Like that's why you have them. You know. If not TradingView, do you view where? Oh, Tradevate. Tradevate. You can do it on Tradevate. That's what I use. That's the platform I use. Without a close, anticipation. It all depends. Like if the market trend is bullish and the fair value gap is bearish, obviously it's gonna, you know, it's most likely gonna inverse. Not always, but you know that you can anticipate that it's gonna inverse. Heading out now. See you tomorrow. Enjoy your tea. Hey, bro. Thank you, bro. Much love, man. What time are you going live? 10 a.m. 10 a.m. Thank you, Joker. How long do you receive a payout? Like a week. It takes like a week for it to hit your bank. They're getting faster with payouts. What's our homework for today? Bro, I don't do that, bro. I don't do that. The class was enough for you guys to get it. Now tomorrow we gotta keep making money. We gotta keep, you know, getting back these wins and all that stuff. All right, guys. Perfect. Ever thought about trading gold? Nah, I don't really care about gold. I'm a stick to NQ. Got a lot of help. Thanks for your info. Of course, but I'll see you guys tomorrow. I'm gonna do a class tomorrow at 4, and then 10 a.m. EST. Yeah, is for the live trading, and then 4 p.m. is for the class. Alright guys. I'm gonna go ahead and call it for today, guys. If anything, DM me. I have everything in my description. If you guys want to go ahead and check out my YouTube, check out the description. It has everything there. Like, you know, if you guys, the community and all that stuff, if you guys are interested in joining that, it's all there, guys. Alright guys. Alright, I'll see you guys tomorrow at 4. Alright guys. Peace out, guys. Peace. And then for the people on my YouTube, guys, what's it called? I'll see you guys in the live tomorrow. Alright guys, if you guys want to join the premium, of course click the first link in the description. And if anything, I'll see you guys either tomorrow at 10 and at 4 as well.